Should we buy or sell lumber? First off, read this disclaimer carefully. And of course, do your good deed of the day by liking and subscribing. So I will look at the futures market for lumber, but I will also look at this ETF here. The quote-unquote issue is that these ETFs, they track they give you exposure to companies that are in the wood business, but the lumber futures is like pure lumber. So unfortunately, we do not get any data from Refinitiv about lumber. Here you have LBS, Random Length Lumber Futures. So historically speaking, we are at a very interesting level. You can see this green line, and we do have very long-term support back here and also here. So if we zoom in a bit, we can see that the lumber, it's been substantially higher not that far back. So it begs the question, if mean reversion is a thing, then there could be some significant upside. What is a bit of an issue currently for lumber bulls is that we have a very clean resistance level, the purple 20-week moving average. If we go to the daily data points, then the blue 100-day moving average plays a similar role. Very easy place to put on short positions. The problem for the bears is that in this case, in October, the short was very clean. In this case, it's a bit dangerous because the bulls, they are not spooked, they are moving sideways, and that can become more dangerous. So let's look at these other indicators. We are relatively low on RSI, so while we are at an RSI resistance level, based on the previous peaks of RSI back to July of 2022, this is still, though, a very low level for RSI. So the context of this resistance level is different. If you go to the daily data points, yes, we are at the resistance level for our RSI. We failed back here on the same level. As on the dailies, there could be more, there's a bit of a more risk of a pullback. However, we do see in the candlesticks that we have a consolidation reaction to getting, relatively speaking, overbought based on the current range of overbought and oversold levels. In this case, I write 100 daily moving average resistance as the entry signal stop loss. I do give the bears -5 here on the technicals, but this is not a strong bearish setup because we do see that the bulls are consolidating. So while the bulls have not been able to break out of the resistance level, they are doing something that the bears certainly are not big fans of. When we look here at the seasonality, it gets even more dangerous for the bears because looking to the left, over the last 5 years in green, 7 years in blue, and 10 years in red, the seasonality is really bullish into late March. Looking here to the right, we do have a 12% gain so far for January, which is definitely strong. But some of the relatively recent years, like 2019, 2021, did actually see much bigger rallies. 2022 was pretty bearish, though. February is very, very messy. It can be pretty bearish. Then again, 2022 was extremely bullish. So these kinds of big numbers can very much distort the averages you see here to the left. So that's why it is beneficial to combine the table view with the average line view. I think I will weight the table view a bit more because the data from some of the previous months could really have distorted the lines we saw to the left, the averages. So I think I will give this one a bit to the bears, but only a -1 here, very weakly. When it comes to the fundamentals, I will be far more bullish. I will give this a number 6 here to the bulls on the fundamentals, and that is based on data I have from another service, but it's a bit risky to show that online because of licenses. Here is the correlation between lumber and S&P 500, 60% with the cut ETF. It is 69%. With wood ETF, it is 74%. On the daily data points, we have a mere 11% with S&P 500, 25% with cut ETF, and 28% with wood. So the strongest correlation, short and long term, is with wood. So what happens with wood is going to affect lumber, and lumber, of course, is affecting wood, the wood ETF. The big difference is that the wood consists of stocks with the great exposure to timber and forestry, and obviously those companies are very much affected by the price of lumber. But as you saw, the correlation was strong, but not like super strong, because there's a lot of other factors that will affect the companies themselves. But here's the chart. I do see a bit of an inverse head and shoulders, which is bullish. The problem in this case is that the left shoulder is a bit higher than the right, so it's a mediocre inverse head and shoulders. Looking at the daily data points, yeah, it looks okay. A bit of a consolidation pattern in development. Let's look a bit here at the seasonality. So the seasonality here for the wood ETF is pretty decent. 4% so far for January. Compared to other Januaries, that is decent, but there could be more upside based on some of the previous months. Then again, in terms of the average, not that much of upside. If we look here at February, ever since 2015-ish, February has been a weak month though for wood. Here I am comparing the lumber futures with the wood ETF, and in this case, we do have a very interesting pattern because it looks a lot like we have relatively reliable time cycles. Could be a major rising phase right around the corner. We are at the horizontal support level. Okay, so I misspoke a bit. Okay, so that would be bullish for lumber. Okay, that's not bullish for wood, because in this case, it would mean that lumber could outperform wood significantly. So let's look here at the daily data points. We are emerging from a key low that was tested back here, as you can see. Let's look at the seasonality here. Yeah, so the seasonality suggests strength into late January, some pullback, and then massive strength into March. To the right here, we have 8% outperformance so far in January. If we look at February, it usually is bullish, and 2022 was ridiculously bullish. So yeah, lumber could meaningfully outperform the wood ETF. So let me mark this one down. This was pretty good. I will give the bulls a 5 here on this one. On relative performance, and I will change from cut to wood because the correlation was a bit stronger like that. 1.3 in favor of the bulls, not like a massive gain. Well, an edge. 100 daily moving average resistance paradoxically is the entry signal, which is a bearish entry signal, but in this case, the odds of a breakthrough is increased. So yes, the bears are still in control, but they have a relatively weak hand because the overall score here flipped to bullish. We have some time left. Let's go through some of the investing ideas that I published way back. So if we go all the way back here to 8th of March 2022, I made a video about Medtronic. Trade these moving averages was the title. So yeah, let's look at Medtronic. In that video, I was feeling more bullish than bearish. So what is the status now? Medtronic, it's well, it is emerging from a very interesting level. What is a bit of an issue is that the initial impulse move now from the lows, it's a move that we missed. So how big is that move? It is, okay, not super big. It's like 7%. So it seems like a low is forming here for Medtronic. Let's explore a bit further. Okay, we'll go to the dailies. The seasonality here is decent. To the right, we have 4% so far for January. It's a bit on the higher end of the spectrum though for January. February, however, usually is bullish. That's definitively leaning me in a more bullish direction. Looking at price book ratio, really low price to sales as well. Really low, frankly. The yield, it's this is pretty good yield at 3%. So let's explore the price targets here a bit. 3.36% yield. I mean, that is pretty darn good. 21 analysts have a 1-year price target. Average price target is 9% above us. Highest is 57% above us. Lowest is 5% below. 29 analysts have a rating. It's at a buy, though most are at hold, but that is like the classical thing, really. So Medtronic is looking interesting from a more bullish perspective. Back on the 15th of March 2022, I made a slightly bullish horizontal support video about Super League gaming. Yeah, it's seen better times, but if you are into buy low, selling high, then this certainly fits the bill. It's really low now. What are the news here? Yeah, gained 7% after record engagement in December. I'm very bullish on esports. It's just that I'm not a reckless bull either, so I do take signals from the market. We have seen a very substantial rally from these lows, so maybe not. This is probably not the best entry opportunity. We recently had a max, 72% gain, but it still is very low. It's just let me look a bit here at the RSI. Yeah, it's if you look at the RSI range here, we are pulling back from a level that's led to some sharp pullbacks in the past. It's a bit dangerous here on RSI. Seasonality. This is one of the best months on record, which could be a bit of an issue. Maybe a lot of the upside has occurred. Maybe we are like do a pullback. Looking at price book, we are pretty low. Price to sales as well. Price earnings though is a bit higher. Let's look at the price targets for this one. Yeah, let's see if there are forecasts. Yeah, 2 analysts. So the average, minimum, and max is 308% upside. Okay, that's bullish, but not that much to go on. And they all have strong buy ratings. So I do think that Super League Gaming, it's definitively an interesting stock, and given that the share price now is 49 cents, you could of course just take a bit of a long-term small diamond hand position in Super League Gaming if you just want that exposure to esports. The problem though is that it tried to form lows quite a few times and certainly not worked out so far. Let's explore their website a bit. Super League. We are the rocket ship to the metaverse. Super League's owned and operated game worlds serve as a leading launchpad for brands and creators to accelerate their success in the gaming metaverse. Okay, a bit of cumbersome speaking here. I'm not. Yeah, I mean, overall, I do think that this looks interesting. Um, um, yeah, 70 million unique monthly players, 1 billion monthly views across all social and digital platforms. It looks good. And when it comes to the metaverse, there's been some issues, for Meta itself, because it still is a bit early. But yeah, we have looked at number, and we also, interestingly, even looked at metaverse. So we went from the very real, tangible stuff all the way into the digital real estate realm. So yeah, whatever you do, of course, you always want to have an entry plan and an exit plan.